In problem 2-2, we're going to record some market ratios and calculate them. And so the first thing that I'm going to do is read the required to see which ones that I need to do. So in part A, they want me to do the earnings per share and the common dividends per share. Once I have those two amounts, I can calculate the payout ratio and then figure out how my retained earnings increased, and then calculate my price earnings ratio. So I always like to write out the formula before I solve it, just so I know that I'm picking the right ratio to do. So the earnings per share formula is your earnings after tax, and then you subtract your preferred share dividends. So I'll just call them preferred dividends. And those are the ones paid during the year. And then just divide that by the number of your common shares outstanding. So this is really a weighted average calculation, but we're just going to keep this very basic. And the top one is $1 and the bottom one is a number. So the reason why this question is a little bit complicated is because they don't tell me what my earnings after tax is. I actually have to calculate it. So what I'll do is I'll prepare the bottom part of the income statement in order to get to my earnings after tax. So this is good practice putting the bottom part of the income statement together. So I'm going to start with my earnings before interest and taxes. So that's EBIT. And the number that they want us to get is this 200,000. So they're calling it current operating profit of 200,000. So that's our EBIT. Then we subtract our interest expense. And they tell us in the question that the interest expense is 10,000. Now, when you take 200,000 and subtract that by your interest expense, that's going to give us our earnings before tax. So that's 190,000. And now I can subtract out my tax expense. And in this case, they gave it to me. They said it was 38,250 from the question. And now, when I subtract that from earnings before tax, I get 151,750. So that is my earnings after tax. So that's the number I need to put into this formula now. Just highlight that there. Okay, so earnings after tax is 151,750 minus my preferred dividends. So they said that the preferred dividends were 18,750 from the question. And then divide that by the number of shares outstanding. Remember, it's just the common shares outstanding. That's 20,000. So if I take 151,750 minus 18,750, that gives me 133,000. And divide that by 20,000. That gives me 6.65. So they want us to round this to 2 decimal places. So this is how I would read this ratio and read all of the ratios. So whatever one amount you have on the bottom gives you this many, which is the answer, on the top. So basically, for every one common share, you get 6.65 of the earnings to the common shareholders. Okay, so now the next ratio that I'll do is the common dividends per share. And the formula for that is your common dividends paid. So it's a dollar amount on the top, and divide that by your common shares outstanding. So my common shares, or my common dividends paid, were 30,000. And then my common shares outstanding are the 20,000. So those are both just given to us in the question. So that's $1.50. And so again, to read this, for every $1 of common shares on the bottom, you get $1.50 of the common dividends paid out for the year. So now that we have those two numbers, we can go ahead and calculate our payout ratio. And just remember, the payout ratio formula is our common dividends per share, so the one that we just found, and then we'll divide that by our earnings per share. And both of these are dollar amounts. So the common dividends per share was the $1.50, and the earnings per share was the $6.65, so that's what we calculated first. So when we divide those two together and round it to 2 decimal places, or maybe 4, because it's just going to come out to a decimal, it's 0.2256. And now I want to express it as a percentage. So what we can do is just move the decimal place over to, boop, boop. And now we've got 22.56%. So then what that tells us is for every 1 earnings per share, you get 22.56% of the common dividends paid on that 1 share. Okay, so now when we take the change in retained earnings, so change in retained earnings, what you need to do is just take your net income and subtract all of your dividends. So subtract your common dividends and subtract your preferred dividends. So the net income from this question, remember we calculated it way up here? So the net income, also called the earnings after tax, is $151,750. And maybe I'll just say EAT, just so you know that that's the same term. And then my common dividends were the 30,000, so that came right out of the question. And the preferred dividends were 18,750. So when we add those, so 151,750 minus 30 minus 18,750, that gives me 103,000. And so that's an increase in retained earnings. So the last one that I have to run is my price earnings ratio. So again, I need to know the formula. Price earnings ratio. So you can take your market share price and divide that by your earnings per share. So they told us our market share price. So it's like if we went and had their ticker symbol, then we could go onto their website and see what their shares are trading at right now. So that's 41.23. And then divide that by the earnings per share. So that was calculated up here, which was 6.65. So then that gives me 6.2. So we'll just round that to 2 decimal places too. And let's just check our work to make sure that we did everything correctly. And that's the end.